Wagwan. It's your boy, the passionate trader, back again with another video. Yeah, you feel me? Yeah, yeah, yeah. You know what I'm saying? You know what I'm saying? You know what I'm saying? Yeah. Now, today I'm back again on the charts. You know what I'm saying? Let's see if we can find some good trades with this 2025 price action. You feel me? By the way, for those who are following from my previous live stream, my current my funded account challenge or my profile if we can spot some a bit crazy in terms of sorry, just give it a couple of minutes. There we go. Yeah. As you can clearly see, we are on the volatility. You know what it is. So in short, you could just say VIX. It's just VIX as an abbreviation. Yeah. Now, anyway, as you can probably see, there's a bit of some, there's a bit of a technical analysis that I did, a while ago on volatility index. On volatility index, yeah, of which I managed to successfully acquire those bullish trades, and I'm currently floating about, let me just check my device, I'm currently floating about 1,200. Just give it a couple of seconds, this to just respond. Yeah. Currently 100. understand? Floating. You understand? Mind you, this is not the prop from my account. This is just my actual trading account. My usual main trading account. As you can see, the balance is literally minus 136. You know, because we had the little in this account. So as you can see, it's currently minus 136. Not only that, but if you look at the history, you can see 1,000 was deposited into the account. You know, so obviously, right now we're still in the balance, and the only reason my broker's letting me hold these trades is because they're in profits. If it wasn't for that, the account would have been at zero, and I would not have any trade running at all. That's what I'm saying. So that just goes to show how important it is to have really good understand. You want to make sure you have the best broker. Me personally, the broker that I'm using is Vantage. Yeah, Vantage Markets. You know, if you go and check my video on YouTube, you realize in the description there's a link there for anyone who wants to get registered. You understand? I don't gain anything really from you clicking the link. It's, you know, it's up to you whether or not you click the link, but it's just left there for those who want to, you know, find the correct website, you know, the broker that you would like to start to use is on specifically, understand? So for those who want the link to the broker that I'm currently using, Vantage Markets, the link is in the description of my videos that I released on YouTube, yeah, at The Passionate Trader, yeah. You understand? They're really good. It's to 500 spreads, ratio spreads, you know, zero commission accounts. They also have a commission based accounts for different types of traders. Those who want to hold overnight trades, and for those who don't mind don't mind paying some extra charges, you know, on holding their trades overnight. You know what I mean? They really have different types of traders. So make sure you get signed up, you know, and you get yourself a live account. Yeah. Now, anyway, so right now we're currently looking at the volatility index chart right now. Now, just give it a second, a couple of minutes. Give it a few minutes to respond, you know. Do you know what I mean? Apologize. Just give the chat a few minutes to load. It seems to be, you know. Spreads, for some reason the page seems to be giving some difficulties. I think I should have it refreshed. Let's just refresh the page. Let's see if that will do any justice, for us. Just give it a couple minutes. It's literally having some lagging that it's literally lagging a bit. So I'm just having the page refreshed and then we can start our technical analysis on volatility index and see really what direction price is moving and what trades would be the best for us to place as price continues to move in whatever direction it is currently in. Yeah, do you know what I mean? So just give it a couple minutes. The page is loading. Mm. Mm. We might need to open a new page for the chart. Okay, let's get a new page for the chart. Yeah. Let me know in the chat what trades you guys placed yesterday, Monday, and today during the daytime. Let me know what trades you place throughout the day or the morning as well as yesterday. Let me know in the chat. There we go. Finally, we have the chart running up again. You know? Okay. Volatility index, as you can see, also known as VIX. Yeah. Currently 4 hour time frame. So what I'm gonna do here is I'm gonna erase all these drawings that we have and we're gonna do a fresh technical analysis together. Yeah, you ready? Now, first things first, we want to go into the daily time frame. Now, the reason why we're in the daily time frame, yeah, is because we want to find out two things. First of all, what type of market structure we're in, one, Two, which points or which date specifically the price hit its lowest for this month we're in and the highest for the month that we're in currently. Now, as you may or may not know, we're in the month of March, yeah? So now we come to this daily time frame. Sorry about that. Okay, there we go. Now we come into this daily time frame. Now notice something. What type of market structure do you see here? It's a range, right? And what exactly do we see here on this chart that's giving us the impression that we're in a range market structure? Well, as you can clearly see, price keeps staying within the same area. It goes up, then comes down here, then goes up here, comes down within this area, plays about for a bit, comes back up, did a slight breakthrough, nothing really too shocking. But as soon as price came back again, it stayed within the same area. Now I want you to notice something. Notice how if I put two lines here, yeah, it's almost as if price is trapped in a box. So this also is another confirmation that this is a range market structure. So in a range market structure, what happens to price? Price comes down and goes up, comes down and goes up as the candlesticks continue to form, correct? Now we'll use these lines, yeah, we'll recycle, okay? It's good to recycle, folks, okay? Reuse the 3 R's: reuse, reduce, and recycle, yeah? All right. Now, like I said, we're here in the daily time frame for two things. One, to identify what type of market structure are we in, correct? Which we already did, and we figured out that we are in a range market structure, correct? Right? Now, on to the second thing. We need to point out the points where price hit the lowest and the highest for this month that we're in, right? So we're gonna use the same lines that I used to illustrate the market structure that we're in, which is a range, yeah. And we're gonna use them to mark out the highest price went this month we're in right now, and the lowest that price did for the same month we're in, right? So right now we're in the month of March, and as you can clearly see, the highest price went during this month of March 2025 was around 26.553, correct? Now I'm gonna make this line red. Why? Because red, I like to use red as a representation of um a line of resistance or an area of resistance. You understand? I use as well other different types of colors. You know, it's not really a necessity to use red. It's up to you really to use whatever color you like, as long as you remember. Yeah. Now, we've marked out the highest price has gone for this month. Now let's mark out the lowest price has gone for this month. Yeah. Now that's February. Let's move further. This I think is March. This is March, correct? Right there. There we go. Let's try to zoom in. See if we can get it as perfect as possible. Yeah. So there we go. Let's move that slightly up again. Looks as if it's touching. Crossed a bit. Let's try to get it as perfect as we possibly can. Okay. Now we have it touching. Now we're going to make this line green, because this is what I like to use to represent, you know, support. you know. Now, we've done two things now. First, we've identified what type of market structure we're in. And the type of market structure we're in is in a range, like I said. Now, the second thing, we've marked out the highest price went for this month we're currently in, and the lowest it went for this month that we're currently in as well. Yeah. Sorry, let me just try and get one of the lines as specific as possible. Um, okay, that's good enough. Now, the next thing, we're gonna go into our 4-hour time frame. Yeah, yeah. Now, what are we here to do in our 4-hour time frame? We want to, identify key areas where one potential resistance could take place. Yeah. How do we spot these areas? We'll notice either long upper wicks or long lower wicks. Yeah. From the past candlesticks that have been formed already. Yeah. Two, we want to identify areas of support, areas of demand, areas of supply, areas of resistance. Why do we want to identify these um, areas? Because we need to know where price has been before it was now either resisted to the downside or before it was um supported to the upside. You understand? That way we know the areas where as price continues to move, it could potentially go and react off of that area, whether it's support, resistance, supply, or demand. You understand? Now, we come here to this current situation that's happening over here, right? Notice how price here has been having some form of a rejection here. One, two. These two areas I've marked with circles. Notice how price had some form of price rejection. How can you tell that price had some form of price rejection? It says you can see at the bottom, they are long lower wicks. You understand? Now the lower wicks are these little stick pieces attached to the body of the candlesticks. So the ones at the bottom are called lower wicks, and the ones at the top above it, or above the body of the candlestick, are known as upper wicks. You understand? Now, notice how these two lower wicks, yeah, are long. So that tells us that at one point when these two candlesticks were being built, yeah, I'm gonna zoom in closer. Yeah, so you can see what I'm talking about. That means when this candlestick was being formed, yeah, it opened here, price opened here, at the top of this candlestick, this bearish candlestick, yeah, came all the way down, came all the way to this area, which I marked with the circle. Then price got rejected here and went back and ended up closing here, which is why the end of the body of this bearish candlestick is right there. And then it has a long upper wicks. So these upper wicks tell you, yeah, where price was before it closed in a different location or either in the same place, depending on how long the upper wick is or lower wick is. You understand? Now, as you can see, there's been some form of price rejection that occurred here. You understand? So this tells us that we should mark this area as an area of support. Why? Because each time price taps into this area, notice how it pushes itself slightly upwards with this formation of these bullish candlesticks. You understand? As you can see, price moved up there, and right now it reacted off of that same area there with that, excuse me, with that previous bearish candlestick. And now we have, I think, a bullish candlestick that seems to be trying to be formed. Yeah. So what I'm gonna do here now, I'm gonna take my rectangle tool. I'm gonna get in a bit closer. Yeah. Now I don't want to neglect this area. Yeah, as a whole. So what I'm gonna do is, yeah, let's get these circles out of the way. Okay. We don't need the circles anymore. All right. Now, what I'm gonna do is I'm gonna use this rectangle tool to highlight this area of support. Right now, the way I like to do it, I like to get the top bit of this rectangle tool, this top part here that I'm playing about with, yeah. I like to get at the bottom of the candlesticks that were previously formed, yeah. I like to make sure that it's touching right there, just at the edge of the body. You understand, yeah, the top bit of the rectangle tool. Then I like to have this bottom bit here touch all the way to where the bottom or lower wick of the candlestick is. So now you notice how I'm gonna put it here, because this is where the bottom of the lower wick is, yeah, the candlestick's lower wick is, yeah. I'm gonna stretch this out, yeah. So now the area that we've just marked out here is our area of support. Like I said, why? Because price taps into this area and it does this slight move to the upside, and it does it again. It does this twice, one, two, which clearly indicates to us that price is reacting off of that area, and this it seems to be respecting that area as a form of support. You understand? Because each time it taps into this area, it supports itself to the upside. You understand? So now what's the next thing that I want to do? I want to identify my resistance. We are still on the 4-hour time frame. Yeah. Now notice how here at the top we have long upper wicks. This long upper wicks. This tells us that at one point, as these candlesticks were being formed to the upside, yeah, at one point they were all the way to this part, but because there was a strong resistance in that area, a strong price rejection, the candlesticks ended up coming back down, making a pullback and closing to where they each closed. Do you understand? Which is why some of them have a smaller body than the other candlesticks. You understand? Now, this tells us that what? This is an area of resistance because price taps into this area and there seems to be a strong resistance that's there, that's resulting in price, coming back and getting rejected. Every time when it tries to break through this area, it seems to face a rejection. Yeah. So I'm gonna take my rectangle tool. I'm gonna mark that there. The top of the upper wick. Yeah. Mark that. Yeah. Then I'll stretch this tool. Stretch it like so. Yeah. Yeah. Just like that. All right. Now I'm gonna change the color of this area of resistance. I'll make it red, to represent resistance. Yeah. Now, with our support, with our resistance, we have identified our market structure. We've already identified the highest price went for this month and the lowest price went for this month. Yeah. Now take note here. In the market, history repeats itself. You understand? It might not repeat itself the specific amount of time it took last time price hit a specific point. Yeah. But at some point in time, whether it's today, tomorrow, next week, next month, next 1,000 years. Or I would like to believe in the next 1,000 years, or the next 100 years. But as long as you understand, within whether it's tomorrow, next week, next month, yeah, price will always repeat itself. You understand? Where price hit and leaves a trace, it leaves a trail, it will come back and hit that same place at some point in time again. You understand? So if price hits its highest, at some point it will hit its lowest. If price hits its lowest, at some point it will hit its highest. It's only a matter of time. You understand? Things that may have a very significant influence on, you know, how long it takes to for price to go back to where it was in the past. Yeah, it's probably the news events that happen all around the world, things that happen in the financial world. You understand? Significant events. That's what could impact the price, significantly and prevent it from getting to where it's supposed to get to at a certain time. You understand? But history repeats itself. Now, notice how price hit its highest on the 11th of March 2025 at 1400. Yeah, British time. Yeah. When price hit that highest, sorry, one second. Thank you. Yes, I got it fixed. Now, when price hit that highest on the 11th of March, yeah, notice how it hit around 26.02, yeah? Price then had a strong rejection there, as you can see, indicated by this long upper wick. For the next couple of days or weeks or so, price moved all the way down to 17.897. So from hitting the highest it went for this month, which was around 26.602, it then went on to hit the lowest for this month, which was around 17.897. Now, because we know as traders that history repeats itself at some point in time, the assumption is that now that price has hit its lowest, coming from its highest previously, the next direction it's supposed to go to, the next direction is supposed to move now, or the target is supposed to hit, is back to the highest it did for the same month. You understand? And then from there, come back down again and vice versa and continue up, down, up, down, up, down. You understand? So already we have different sets of confirmations. You understand? One, we've identified our market structure. Two, we've identified our highest and lowest that price went for this month, which helps us understand, the overall trend that price is supposed to, take throughout the next hours or the next days and so on. You understand? Three, we've identified our support and resistance. Now, what are we waiting for? We are waiting for a breakout or a retest to the upside to further give us a confirmation to now then place our entries, our trades, if you will. Do you understand? Now, based on the information that we have gathered here together now, that tells us that we should be looking for long-term position trades. We should be looking for buy trades on volatility index. You understand? Now, mind you, this is not financial advice. This is for educational purposes. This is just something that I would do personally, given that I've received this good piece of information. You understand? Now, as you can see, we identified our support and our resistance in the 4-hour time frame. So, what are we expecting to happen here? Well, it seems that price, yeah, has been respecting this area. As you can see, price came from this bottom there, went all the way up there, hit this area and made a new area of support here, went up here, resisted, got resisted, came back down to this area of support to where it's playing about. So we are hoping for price to respect this area of support, and now from where it is, make its move back to the upside, and hopefully this next upward movement that price decides to take on volatility index, we are hoping for it to break out, then come back down, do a retest on this area of resistance, which would then turn it to now a new area of support, as price would have then supported itself from that area which was once resistance. You understand? So that's basically what we are hoping from, this kind of situation, you know. Now, not only that, yeah, but what I would like you to understand that is that we could have a possibility that price drops further. Now, what I would like to do now is use one of my favorite tools, yeah, to, give me that further confirmation on which area on the chart to place these long-term position trades, and get the best entry as possible. You understand? So notice right now how I've just put on my Fibonacci tool, my Fibonacci retracement. As you can see, I've just put my Fibonacci retracement, and you can see it's the color orange. So I'm just going to put it there, the lowest that price did, the lowest price came from. And I'm just going to put the top of the Fibonacci retracement. The area of resistance the price went into. Yeah, that should be good. Now, the reason why I've placed this Fibonacci retracement here is that I want you to understand something. This Fibonacci retracement, yeah, the reason I placed it here is to help me further identify areas where I could possibly get the best entries possible. You understand? Now, what does this Fibonacci specifically do for me? What it does here is it does that by working in the sense that any area that price taps into that is beneath the 50%, so any area that price taps in that is below this 50% line, I get to place long-term position trades at a discount. You understand? So the reason why I've put this Fibonacci retracement here is because I would like to prepare for the possibility that price could decide, instead of following this blue direction I made, price could decide to follow this new direction that I'm about to make for you. You understand? Now, so notice how I've made two possible directions that price could go in on its way to the upside. Now, this Fibonacci retracement now is to help me identify which areas I'm looking for price to tap in to give me that discount, that discounted long position trade on volatility index. You understand? That way from there I can now ride with price to the upside and continue to hold these trades as price continues to retest and progress further to the upward direction. You understand? So I'm hoping for price to either touch the 50% line or any area really beneath the 50% line. So it could be the 78.60, the 100%. You understand? Hopefully not 100% because that's a bit too low, to be honest. You understand? Anyway, maybe between 50 and the 78.60 area, yeah? Now, what I want you to also realize is notice how in this little area here, slightly above the 78.60 line, notice how there are long upper wicks on these candlesticks formed. Like we were discussing a few minutes ago, that is a clear indication of price rejection. Yeah. So that tells us there was a bit of price rejection in this area before price made a complete decision to now aggressively move to the upside with these large bullish candlesticks that were formed. Yeah. So this area with these candlesticks had a long upper wick. Yeah, like I said, tells us that there was price rejection that was happening there. Now we've marked this area as well. Why? Because this is another area of resistance. Because we can clearly see that price kept rejecting within that area before making its official breakthrough to the upside. You understand? Yeah. So now I'm just gonna stretch this area of resistance as far as I can possibly. Yeah. I think it should be good enough. Okay, maybe all the way. Might as well stretch that too. Okay, now anyway, now we have another form of confirmation, and that form of confirmation is this area that I've marked here, this previous area of resistance that I've marked here. Now, like I said, price could move in one of two directions that I have here before continuing to its initial movement to the upside. You understand? So now I've placed this Fibonacci retracement and I know which area I would like price to tap into to give me that discounted trade. You understand? That discounted long-term position trade. You understand? Which will in turn increase my profit. You understand? When I hit my TP on the trade. You understand? Now, should price come tap in this area that is within the 50%, yeah, I'm expecting price to respect this previous area of resistance. Yeah, here indicated by this price rejection that happened here. I'm expecting price to tap onto that area and use that area to now support itself into a continued upward trend. You understand? That will help further my confirmation that should price not move in the blue direction that I've indicated here with the blue drawing, that price is now then moving in the direction of this orange drawing that I've made, this orange direction indicator. You understand? But I would need it to tap onto that area of resistance and I will turn it into an area of support by using it to support itself to the upside and continue in the upward direction. You understand? So in a situation like this, I would probably have my entry about here My entry on this trade would probably, I'll say 50. I'm fine with 50. So even if price comes all the way here, I'm still, a bit safe because you can see with what was happening. The difference between this area of resistance and this area of support isn't that too far, The entry isn't too far. So I'll then put my stop loss, slightly outside the 78.60 area, like so, you know, and then this is what I would do. Probably have my target be sorry. You know what? I'm just gonna press the 26.6.02. I'm just gonna change the settings manually. It's the best thing. Just quicker that way. Do you know what I mean? 26.602, yeah. Yeah. As you can see, that is our target. Back to where price had hit the highest for the month. So that's overall target on volatility index on this long-term position trade. Yeah. So like I said, we're waiting for our setup to play out. Literally, as you can see, this is where I would like to possibly enter my trades. So we just want to watch this setup play out. You know what I mean? Now the best places I would say to enter this trade are either here. I will highlight them with circles. Either when price taps into that area there, or that area there, or this area here, or this area here, or this area here. All these areas that I've marked with these six circles, the six orange circles, yeah. Those are the areas that I would advise as those are the areas that I would advise one to enter the long-term position trades on volatility index. You understand? But then again, this is not financial advice. This is simply for educational purposes. Yeah, this is me just showing you something that I would do personally as a trader myself, and based on the current market conditions. This is what I would do on volatility index. You understand? So those are the areas that I would wait for price, to play out in or to tap into. Then I can place my trades, my long-term position trades on volatility index. You understand? You understand? Literally. So do you see how simple it is? You understand? It's not complicated, We had to first identify our market structure. Yeah. Then after we finished identifying our market structure, we identified the highest price hit for the month and the lowest the price hit for the month. Then we looked for support and resistance areas. You understand? Slash demand or supply areas, yeah, as others will know them as. Yeah. Then from there, we're waiting for our breakout to occur. You understand? out of our support or out of our resistance. You understand? Or from our support area or from our resistance area. You understand? That simple, literally. You know what I mean? You know? So now we wait for our volatility index trade or setup. Sorry, because we haven't placed a trade yet. Well, I do still have trades, like I said, running. Sorry, from last week, which I have running, as you saw on my account, literally floating at minus 100. I've literally, my balances are minus 136, but my profit level is around 1,000 and something. You know, like I said, thank goodness to my broker. You know, thank God for this broker. You know what I mean? Literally, as you can see, minus 120. Minus 139. But I'm floating 1,000. Do you know what I mean? So literally, the reason I'm doing this setup, yeah, is so I can look for more opportunities to place more buy trades. You understand? I don't want to just place blindingly. I don't want to add trades blindingly. I want to get the best entries possible as I add more volatility and volatility indexes. Sorry, volatility index trades. You know, it's a bit of a mouthful, isn't it? As I add more volatility index trades, long position trades. Yeah. Now these trades that I have running are currently 6 at 0.20 lot sizes each. Now my take profit on this is 26.595. I don't know if that is that the same as the one we're targeting, or it's just close. Or the one we're targeting is 26.602, which is slightly higher than the one that I have, which is 26.595. You know, but we're hoping to hit our overall target. Should we hit our overall target, we're looking at about £1,000 a trade, because there's about four trades running at 0.20 lot sizes. So we're looking at about 1,000 made each from each trade, at least four. So that you're looking at £4,000, £4,000 made just from the comfort of my laptop behind the screen. Do you know what I mean? Just while connected to Wi-Fi. You know what I mean? On a little live stream. That's if we hit it now before I end the live stream, or tomorrow, whenever we hit it, we would have made profit right there. Do you know what I mean? you know. So literally now we're just waiting for our setup that we have now to play out. Let's go into the 1 hour time frame. Let's see what's happening in the 1 hour time frame. The 30-minute time frame. 15, 5. Okay. Okay. Let's just wait for that to play out. In the meantime, you know what? I think we should just take like a little 15-minute break, you know, and then we can just get back here at like we can just get back here at like 13 minutes past 9. Yeah. Get back here at 13 minutes past 9. Yeah. So let's just take a break. And yeah, hopefully by the time we get back, our setup would have already played well, and you know, we can add more volatility index trades. Do you know what I mean? Yeah. So 15-minute break. We'll be back at like 14 minutes past 9, and hopefully by then, you know, our volatility index trade or setup would have already played out, and you know, we can add more volatility index trades to what we have running already. Yeah. So long position trades, you know what I'm saying? Like I said, we're waiting for the setup. We're gonna break. We'll be back shortly, yeah. We are back again after a short, lovely break. As we can see, we are still currently waiting on another opportunity to enter trades on Volatility Index. For those who have not yet placed any trades, you're quite in luck because while you're watching this live stream, you'll be able to grab yourself an opportunity to place, trades, long-term position trades on Volatility Index. You understand? Now, I'm not gonna be here long. I'm gonna end the live at 9:30. Yeah. So should the setup not play out by then, what I would recommend is anyone who's watching the live stream right now, you know, I hope your screen recording or you took a screenshot of the volatility index setup that we have right here. That's what I'd recommend. That way you're able to have some sort of reference to place trades as soon as the volatility index setup does decide to finally play out, the way we intend for it to. Do you know what I mean? So I would recommend take a picture, clip it, take screen recording, whatever you can, to make sure that you have it as a point of reference, to help you place the right trades and have the right entries with the trades, the long-term position trades. Yeah. All right. I'm still currently on my prop firm challenge, my prop firm account challenge. So you go check that out, like, comment, share, subscribe. Do you know what I mean? Literally day 3 uploaded. Yeah. We have part 1 and part 2, you understand? So go check it out. It's been crazy. It's been a crazy journey, I can't lie. From the day I bought the funded account challenge till now, it's been a heck of a journey. I'll be honest already, you know, and hopefully I do pass it, you know what I mean, and we can get that, funded account sorted out. Do you know what I mean? You know, but yeah. By the way, if there's any chart you want me to look at, before I end the stream, go ahead, type it in the chat box, and we'll definitely take a look at that chart or market, and I'll give you insight on what I think would have been the best, what would be the best thing to to do in that market. Do you know what I mean? So just let me know in the chat, and we can sort that one out for you. Do you know what I mean? Before I leave, yeah. Make sure to check out my TikTok page at the personal trader. One word, check out my videos. Do you know what I mean? Like, comment, share. Do you know what I mean? And drop a follow. Check out my Instagram, my TikTok, my Instagram as well as at the personal trader. One word as well. Check out my videos there as well. You know, just like, share, comment, and drop a follow. Yeah. And as well as my YouTube channel. Subscribe, enable your notifications so you know when I next drop another video. Do you know what I mean? As well as, comment, share, and subscribe. You know? Do you know what I mean? And for those who want to join my free signal group where I send daily signals, you know, on Forex, foreign exchange, on futures like gold, Bitcoin, cryptos, do you know what I mean? Indices, just, send me a text message on any one of my platforms. It can be Instagram, it can be TikTok, on WhatsApp with my number, for those who have the poster, the which live poster schedule. So you can just send me a text message on any one of my socials or any one of my numbers. Yeah, and we can get you into the free signal group, and you can start making some profits. Do you know what I mean? I will be leaving in the next 8 minutes. Yeah. Hopefully this does play out in the next 8 minutes. If it doesn't, it doesn't matter. Wait for it to finish playing out, like I said, and then we'll place. But the important thing is that we know what trades we will be placing. Oh, volatility. Excuse me. Yeah. The most important thing, yeah, is that we know what type of trades we'll be placing on volatility index, and which are going to be long position trades, like I said. We're just waiting for the setup to, play out. Okay, so what I'm going to do, yeah, I'm going to mark out some potential TPs, potential take profits for the trade. And what I'm gonna do is I'm gonna send this trade as well to my signal group on WhatsApp, my free signal group on WhatsApp, to all my members. Yeah, we're gonna send it to them. Yeah. I'm gonna make these TPs white lines. Yeah. So the white lines represent possible TPs. Yeah. So what I'm gonna do is I'm gonna take a picture of this off of my phone, and I'm gonna send this setup to my free signal group. That's what I'm going to do. Yeah. Okay. I'm gonna give it to them right now. See, buy. Buy volatility index, VIX. Stop loss will be going at about 18.294. TP1 will be going at 21.986. TP2 will be going at 22.655. TP3 will be going at 23.992. TP1, 2, 3, 4, and TP4 GP4 will be going at 24.810. Mm-hmm. So I'm gonna send it now. 1 second. Okay. So I've just sent the signal to my free signal group on WhatsApp. Yeah. Just send it to them now. Okay. Just gonna show you for a second. So, okay, there you go. As you can currently see right there, I've literally sent this signal to my free signal group on WhatsApp. As you can see, literally I've just told them there, to buy volatility index, at market execution, with the TP1, TP2, 3, and 4. And I've told them everything they need to know about the trade they're about to place. Yeah. So now we'll wait for, our trades on volatility index, our long position trades. We'll see how they play out, throughout the rest of today and when the market opens later on as well. So